Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your stock miner, Brian Johnson. And I have had a very, very busy week. The markets were very busy this week. I was very busy this week. My son is graduating tomorrow. We had a big bash for him and his friends Friday night out in our yard. That was a lot of fun. We had a great time. And I want to say congratulations to Ryan on making it through school. So I've been dealing with the whole party thing and getting ready for the graduation, which is tomorrow. That's why I'm doing my videos tonight on a Saturday, even though they are dated for Sunday. Yes, I know. But I like that. That helps keep me straight when I'm doing other things within my video structure. I'm also dealing with a on again off again basket case for a wife. Any of you that have been through graduation, this is our first, so it's especially tough. Our little girl is going to be our last, and that's another 8 years or so away. So at least we have some time before she totally goes over the cliff. That one will be really tough. So we're very, very, very proud of him. He's going to college, but he's not going far from home, so it's not like we, won't get to see him. So I want to say I'm very proud of him. I also got my brand new computer delivered to me on Thursday, and I'm up and running. It looks like everything's set up and going right now, and it is smoking hot. It's really fast for all you tech geeky guys out there. I got an i7-930 processor, overclocked to 3.6 gigahertz, running dual GTS 250 video cards, running my 4 monitors in SLI mode for my gaming that I like to do on occasion. It is liquid cooled with 6 gigs of RAM. That's about the highlights that you need to, and a big old cooler master. It looks like a small server for all you techie guys. Literally, it looks like a small server. It's crazy. But I'm loving it because I'm a total geek, and this is like a Tim the Tool Man Taylor type of computer right here. I'm just digging it. So, very, very pleased with it. I've got a million windows open and nothing slowing down. I'm very happy. Now, I did get some new software when I upgraded to the new computer. So, if you watch my video Friday, you notice that it started immediately and there was no controls on it. I apologize. I didn't have all the settings right, so I think I've got it all fixed. I guess we'll find out, but I really do think I've got it fixed now. So you should be able to, you should have the controls back and everything. All right, so you know what? You didn't come here to listen to me jabber about my life, but it's kind of fun. I'm kind of making it's almost a reality show trading thing that you get here. Not only do you get the markets, but you get a reality show with it. All right, let's break into the markets. It's really pretty simple this week, guys. We had a huge move down on Friday after the news came out. Everything trickled down from there. We were setting up really nice. Dude, I wanted to get bullish. I tried. I really did. And I said maybe a gap up over the 200-day moving average and the 20-day. That would be perfect right here. Nice setup. Yeah, the charts would not allow me to get bullish, and they kept me neutral to bearish, and lo and behold, we broke down. The charts were right. They were right to keep me neutral to bearish on the markets and not allow myself to get, overexcited about any kind of bull move. So we get the move back down. Now we are sideways though, guys. We go all the way back here to the 21st, and you can see if we come straight across, we're really just down and up and down, up and down. It's all sideways chop. That's why the swing trading has been terrible. The day trading has been good. We've had some great entries. But overall, are we getting below some levels to make us more bearish? Yes, but not below the big level. That's down here. Once we hit below this 9,800-ish level or so, okay, it could be off to the races for the bears. Here's the big red candle we saw down from Friday, holding the 200-day, holding the 20-day, holding the big blue above it. Lots of overhead resistance. This is where the gap up would have been the perfect scenario for the bulls, and they did not get it because the news is awful. Right back to this lower line, though, you'll see how it held very nicely on Friday. That's where we got it kind of a bounce back up in the markets where we closed towards the bottom. But any major gap down, and I'm talking major gap, maybe 15 to 20 points, or even a big gap of 8 to 10 points to start Monday, could be very bad for the bulls. It's going to get us back below this area here, and that is not good. Not good, not good. So we will be watching that closely coming into Monday morning. NASDAQ, same thing. We got the breakout. Now I'm going to go right to a daily on the NASDAQ and show you this. We got the breakout above all this stuff up here, and it could not hold it. The bears brought it right back down again. Any break below this 200-day, I think, gives you a good trading opportunity to the short side on the NASDAQ. If it gaps below it, though, I'd probably stay out of it. Don't get too excited about it if you get a gap down below it. Wait to see what it's going to do come Monday morning if that happens. Otherwise, any nice slow breakdown through that, yeah, I think that gives us a great shorting opportunity, even though I'm not big on shorting the NASDAQ. But any breakdown also gets us below this major area here, and that's what I'm really watching this next week. Will we see a breakdown here to come back and revisit this area? A lot of the other indices have done it. This one has not. It's been very strong. So we'll be watching this closely coming into Monday's trading. SPX on a 60. Look how we held this level here. This was nice. This is actually a line I just added this week. I cleaned up a bunch of the charts, made them look nice and pretty, but there wasn't much to show because it's just chop. Look, down, up, down, up, down. We're in a channel. It's a trading range right here. We're waiting for a break of that trading range. Up and over the 1105, down below this 10, ultimately 1045-ish area, I would say, for shorting opportunities. From a daily standpoint, same thing. Held the 200, held the 20, held the blue line over top. Needed that big gap up to get us up and over all of this gunk. Didn't happen. So now, path of least resistance is still to the downside. Still to the downside. I am remaining neutral to bearish on the markets because the charts tell me to. They tell me to. And quite honestly, I have no reason to see it any other way. If we can get breaks up and over here, great. But until that happens, I can't, allow myself to play anything heavily bullish quite yet. So we'll wait for breaks below this area here, and this is right around the 1055 area. That could be a good entry for a short, and the 1045 area as well. SPX on a weekly doing the same thing, coming back to maybe retest this. I don't see any reason why. It's already below the 50 week. I'm going to give the bulls one more week to get back up and above the 50 week. If they can't, things are going to get bad for the bulls in the future. Might not happen right away, but in the future for sure. VIX on a daily here, holding its own, going chopping sideways on it on the daily. You can see it started way up, moved all the way back down, allowing the markets time to breathe, but now pushing itself and looking to make its way right back up again. Holding in this red area here, this kind of red zone I've got. This is critical up and above here. Here's the red zone. If we head any higher through this chop, 1, 2, 3, 4, 5 weeks of chop that we've stayed up here in this little red zone, it will continue to be bearish in the markets and start a major move, potentially in the VIX, to the upside. Still looking at 50 as the overhead resistance here. Apple on a 60-minute came back to test this line right here. Did not get the break above 265. I'm waiting for breaks below ultimately. Oh, I don't know. Well, you know what? Below this 200 would be all right. If you can get a good firm break of that area, a gap below it doesn't help us any. Also, this is holding well on the daily. So as long as this blue line holds, and the 20 and the 50, that's bullish for Apple. It's still bullish for Apple. Watch this stock closely coming into the new week. We get any kind of bullishness back in the NASDAQ or in the markets, I think Apple's set to move. So be watching this one close. Apple on a weekly, also holding the blue line. I don't know if it's going to give it up yet, but this will certainly be the big thing we're watching on Apple for the end of the week. I will be watching that closely coming into next week. FAS on a 60-minute, look at the chop, right back down here to lower support at 21. Ultimately, $20 is the bigger level down below. That'll coincide, $20.50 or so coincides with this. So anywhere between, I'd say, 20.25 and 20.50 is a good short if it gets down and below that area. Otherwise, to the long side, I got nothing for you at this point. This is just completely falling apart. It's getting worse in the financials. FAZ breaking up and out of this symmetrical triangle right here. We saw that last week. I just drew that in. Up to overhead resistance. Anything above that 1655, 1660 level, I don't see any reason why you couldn't play it back to 1725, 1730. That might be a good intraday play. From a daily, same. Look at all the chop. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days in a row of sideways action, basically 12. Going nowhere here from a swing traders. Let it get above the 200 and you should be just fine. Below 14 for a short. That'll do it for this week's video, guys. Coming into the new week, we're still in kind of a tweener mode, but you have to be bearish here. You have to be neutral to bearish here. We get breaks below these levels, guys, and it could be lookout below. It could be lookout below. That doesn't mean we're going to go down to 300 or anything like that, but it would substantiate a pretty sizable move in the markets, I think, if we can break back below here. And I just think it gives us a good shorting opportunity. If we move 100 points, great. If we move 800 points, fantastic. But I think below these levels here give you opportunities to short the market. You're going to want to be careful the first few times to make sure it does break and stay underneath for a while. That'll be the major trick, not only breaking it, but staying below it. That'll be tough from a trader standpoint until it's finally broken through and held there. I would be watching for that to maybe happen potentially Monday morning. A gap down, that would be the way to get below this really, really fast. So all eyes on the futures markets come Sunday night, and we'll see what we get come Monday morning. Regardless, I'll be back with you Monday night after all the festivities are over with. Talk to you later. Bye.